Listen, if you're learning how to trade and you keep having small green days, but your red days always outweigh your green days, in this video, I want to share one simple concept that helped me go from an unprofitable trader to a profitable trader by simply understanding risk management. Okay, so in this video, we're going to be talking about risk management. Now, risk management is super important because a lot of people understand what risk management is, but they don't actually use it in real-time trading, and that is the most important thing to do. So in this video, we're going to be talking about exactly how to use risk management, what risk management is, and then we're going to be looking at examples. So before we get into the video, I want to do a quick summary on risk management. Now, these slides will be shorter as I want to get into the examples a little bit faster, but we need to understand what risk management is. So for a quick summary, risk management refers to being able to control the amount you win or lose per trade. Without this, you are gambling. Now, a lot of traders come into the markets and what they do is they'll enter a trade and they'll only think about how much money they can win. Now, because they do this, they don't actually understand how much they can lose. And because of this, it's the same thing as going to the casino. Let's say you go to the casino and you put $100 onto the roulette table thinking it will hit red. Now, because of this, you have a 1-to-1, meaning you're going to risk $100 to make $100. Now, most people, once again, they don't think about that risk and they're just thinking, what if I make $100 and double this money? Now, with trading, people come into trading with the exact same mindset. They're not actually thinking about how much they can lose, but only how much they can win. Most traders don't effectively manage their risk, and this is the #1 reason that I see most traders fail. Now, how do we use risk management? So each trading strategy has a unique risk management strategy. Now, notice how I highlighted trading and risk management. This is because it's very important for you to understand that your trading strategy correlates with your risk management strategy. Not every trading strategy has the exact same risk management strategy. So in this example here, we can see a scalper, day trader, and a swing trader. Now, for a scalper, you may have a 1R multiple. What this means is for every $1,000 that you're risking, you're making $1,000. Now, this is because most scalpers should have, in theory, a higher win rate. Number 2 would be a day trader. This is a 2R multiple. This means for $1,000 of risk, we should be making $2,000. And then finally, a swing trader. This is a 2 to 4R multiple. This means for $1,000, we should be making $4,000 in profit every single trade. Now, what this means is if we have a higher R multiple, we usually have a lower win rate. It's not that you can have a high R multiple and a high win rate. That just doesn't exist. Most strategies do not align with that. And therefore, you need to pick. Do you want a higher R multiple, meaning you make more per trade, or do you want to win more trades? Now, to actually visualize this, let's go over to the next slide. And here on this slide, we can see risk to reward. So what we see here is exactly the R multiple, and then we also see the win rate you need to become profitable. So as we can see with the 1-to-1 R multiple, to be break even, of course, this would be a 50% win rate. This means we need to win 50% of the time to just be break even with a 1-to-1 R multiple. Now, with a 1-to-2 R multiple, meaning we're risking $1,000 to make $2,000, we can have a lower win rate. Here we can see that we would still be in profit with the 40% win rate. So as we can see, the higher the R multiple gets, the lower win rate we need to actually be profitable. Now, one of the biggest mistakes I see new traders making is that they'll try to have a high win rate because they're not comfortable losing trades, but because they also want a high R multiple, their trading strategy will not align with their risk management strategy. So what ends up happening is, let's say they have a 1-to-2 R multiple and they're looking for at least a 50% win rate. To keep that win rate, they'll start decreasing their R multiple, and that just won't work because they're going to decrease it to a 1-to-1 R multiple. So yes, in theory, their win rate will get higher. However, the more they decrease their R multiple, the more trades they need to win. And because their strategy only gives them around a 50% win rate, they will either be break even or they will not be a profitable trader. So in this video, to emphasize risk management, I'm going to trade simple support and resistance over a 1-week period, and we're just going to have a 2R multiple. This means for every single trade we enter with support and resistance, $1,000 risk, we need to make $2,000 every single time. And I want to show you by having a proper risk management strategy, the consistency you'll see with your trading strategy. Now, quick interruption to that video, but if you want to join the Accelerator program that I've been working on for the past past 5 months. I'll have more details soon, but if you want priority access and updates, make sure to join the link in the description, and I promise I'll have more updates for the program soon. But let's get back to the video. Okay, so as we can see, we're on the examples now. We're going to be using SPY, and we're going to be going through 1 week of actually using proper risk management. Now, for support and resistance, the only levels that I'm going to draw out are going to be the pre-market high, the pre-market low, and then any levels in between pre-market. So only pre-market pivot levels, that's it. So for me, I see a pre-market pivot level right here. And then finally, I also see where pre-market opened up right here. So we're only going to be using these levels for support and resistance. And now we're just going to play out the trade. And every single time we enter one of these trades, it needs to have at least a 2R multiple. So let's play out this trade. Right off into the beginning, we see that we are rejecting, right? So this is being used as resistance. We are rejecting this pre-market pivot levels. So for me, we're going to enter into a short position, and our stop loss can simply be a little bit above this candlestick, right? Because this is a previous pivot level that we've been holding. So our stop loss can be a little bit above this candlestick, and our profit target can be down here at this pre-market low. Now this gives us a 2.21 R multiple. Let's enter into the trade here, and let's see exactly what happens. And just like that, we were able to capture this whole move by simply using this resistance and with a 2R multiple. This means on this trade, we risked about $300 to make the $665. So let's close out this position here, and let's go over to the next day. Now, here we are on the second day. As we can see, it's a Tuesday because it was a long weekend on Monday, and we did start off on Friday. Now, we're going to do the exact same thing here. We're going to mark out the pre-market low. We're going to mark out the pre-market high, which is right here, and then we're going to mark out this pre-market pivot level, which is about right here, right? So these are the 3 levels we're going to mark out. This action over here is after hours on Friday, and therefore we're not going to mark that out. We're only going to use the pre-market levels like I've said, and let's play out this trade here. And right here, what we see is we came up all the way to this resistance, and we did try to close above it. However, then we got 2 bearish candles, and you guys can see this candle right here is one of my favorite candles because this is an inverted hammer candle or a shooting star candle. And this basically indicates that buyers did try to bring this up, but because of this wick, what this tells us is sellers were much stronger than buyers. And therefore we can enter into the trade based off of this candle right here. So we would enter into this trade for a short position. Once again, our stop loss here would simply have to be a little bit above high of day, and we're looking for at least a 2R multiple, and this actually happens at the pre-market pivot level, and this gives us a 2.2R trade. So let's enter into a short position once again, and let's keep playing out this trade. And that was extremely quickly. Within 3 minutes, we were able to capture a 2R multiple trade, and this was $410. Now, to make this $410, we risked about $187. So as we can see, these are 2 days so far that we've tested with just simple support and resistance and understanding the risk multiple of just having a 2R. Now let's go on to the next day. Here we are on Wednesday. On Wednesday, we're going to mark out this pre-market high. We're also going to mark out the pre-market low. And then of course the pivot level, and the pivot level just comes in right here at the mid of this candle and this pivot point. So these are all the levels we're going to mark out for Wednesday. Let's play out this chart. And of course we need at least a 2R multiple with simple support and resistance. So let's play out this trade. So far we see a little rejection. What I see here is we did come back and we're rejecting this pivot level. And what we're going to do once again is go for a short position. We're going to have our stop loss simply a little bit above this key level or this candlestick. And we're going to have our targets down here, which is a 2.04 at pre-market low. So let's go into a short position, see exactly what happens. Now, in this example here, what do we see? We were off by a couple cents. And because we were off by a couple cents, we did unfortunately have to stop out of the trade on Wednesday. And this was a minus $270 trade on a 2.04 risk. Now, let's go over to Thursday. Okay, here we are on Thursday. Once again, mark out the pre-market high, mark out the pre-market low right here. And then we're going to mark out a pivot level. Now, within here, the only pivot level that I see is these equal highs. So this pivot right here and then this pivot right here. So we're going to mark this out. And other than this, I don't really see too much that I would be marking out myself. So all we're going to do is wait for any of these support or resistance to hit and see exactly how we can play this. So let's play out this trade. Right off the bat, we can see some strong selling. And right here, we actually see that we came back and we retested. Now, this retest candle isn't the greatest retest candle. However, we are retesting and this is previous support turned into resistance. And therefore, we're going to go short on this position here. Our stop loss can simply be this candlestick right here. And our profit targets need to be at least a 2R multiple, which comes right here, which is the previous low of day. Now, this is a 2.18 trade. Let's enter into a short position and see exactly what happens. And as we can see within 2 candles, once again, we stopped out again. However, it's so important to mention, and the reason I'm making this video, that this loss is okay because we have a 1 to 2R multiple. We don't need a 80, 60, 70% win rate. All we need is above 50 to be profitable. So this is another $155 loss. Now let's go over to the last day to see how this risk management strategy plays out. Okay, so here we are on the final day, and on the final day, we're going to mark out the pre-market low, which is right here. And then of course the pre-market high as well, which is all the way up here. Now, because we did gap up all this way, most likely we won't return to the pre-market low, and therefore we have to mark out pivot levels for the chart as well. And for me, some pivot levels that I see are simply going to be right here. And then finally, because we're kind of making this flag pattern, we have this low right here, and this can be also used as a pivot level. So these are the levels that I would be looking at more just going into the day. So we want to see exactly how we can trade this with support and resistance. So let's play out the day. So right off the bat, the first thing that I can see is 2 things. First is we held this level for support. And then number 2, we're also breaking this kind of flag / downtrend pattern to the upside. So we can enter into SPY right off the first opening candle. And this was considered the opening drive. Our risk here would simply be a little bit below our previous 509.12 level, or a little bit below this previous candle low. And we would be looking for at least a 2R multiple. And therefore we're just going to move our profit target up to 2R. We also have 510 right here, and you guys know I like the whole psychological numbers, so you can also target this 510, which would give you about a 2.5R multiple. And for me, because I know stocks like to gravitate towards those whole psychological numbers, we're going to be using that 510, and this is a 2.46R multiple. Now let's enter into the trade here and see exactly what happens. Okay. And right here, we can see that we made this flat top, and then we actually did hit that 510 level with a 2.46R multiple. Now, to make this $365 with a 2.46R multiple, we risked about $148. So now that we're done with the trades, let's go look at how we ended the week. Okay, here we can see the backtesting results for the previous week of SPY. We went Friday to Friday because this was a shorter week. On the first Friday, we saw that we made $665. Then we continued with another $410 day. On Wednesday and Thursday, we had 2 losing trades for $270 and $155. And then finally, we ended off last Friday with $365 gain. Now, as you can see, the numbers that are highlighted are what we took as a trade. And then the numbers that are not highlighted is how much we could have potentially risked or profited if the trade worked out or didn't work out. As we can see here, this is how we determine our R multiple. Now, with this being said, because we did trade on SPY, you could also use this for ES futures as well. Our weekly profits were $1,440. Our weekly loss was $425. So these are all the trades that we actually did take. And so our total profits for the week come out to $1,015 by simply trading support and resistance and understanding our multiple. So I hope this video showed you how important risk management is. And if you have proper risk management, you can have a lower win rate and still be a profitable trader. If this video helped you, make sure to give it a like. If you have any questions, put them in the comments down below. Make sure to follow me on Instagram and Twitter for more education, and I'll see you guys next week with a brand new video.